Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, and today his focus is going to be on trading option spreads. He's going to talk about when to initiate an individual position or a spread position. He's going to talk about the difference between debit spreads and credit spreads. He's also going to give us some real-time examples on stocks that are moving now, and he's probably going to give us a bonus trade like he did yesterday on the RCL option spread. And lastly, folks, we have a guest today, a special guest. Kane Che is going to be joining us for today's session, so it promises to be very, very entertaining. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And folks, remember, the chat is open to everyone. So here's a reminder of the ground rules. Always be kind, keep to the topic, no political discussions, and remember that we are a 100% supportive trading community here to help each other to become more confident and consistent in our trading activities. Now, this morning at 8 o'clock sharp Eastern Time, Roger had his pre-market open. And here were some of the comments that he shared with us as we got ready to trade today's markets. He noted that the markets continue to be in a range-bound, sideways, choppy price action, much like they have been since back into July, all the way here into and through August. Now, the focus today, once again, appears to be a lot of people are waiting for NVIDIA earnings that are scheduled to come out tomorrow and that key PCE report that's scheduled to come out on Friday. We took a look at, some of the key indexes. We looked at gold, crude, bonds, US dollar, and they were same as yesterday, just moving so-so and largely giving back, anything that they gained last Friday. And there was really nothing there to lead us to believe that there was any pre-market impetus that would move stocks today. In looking at indexes like the Dow, the SPY, the QQQ, the RSA, the IWM, once again, all basically range bound and looking to give back the gains that they had from last Friday. And Roger's biggest concerns was that several of these are trading very close to their resistance level, whether it's the VWAP or the 50-day moving average. And he's fearful that if indexes break below that, there's a lot of clear air before the next resistance level. So we could see something precipitous if we see prices busting through those resistance levels. Not sure that that's going to happen, but it is a concern of his. He also noticed that Bitcoin was leveling lower, but it was still below its range, and he was wondering if it's going to peak back up into that range or basically stay where it is. And of course, the big news he saw was that China large caps dumping on their worst day since April. Remember, as recently as this week, they were trading, at incredible highs, and now we're seeing them a big major dump on those worst since April. Now, as far as his catalysts were concerned coming into the day, and you know the definition of a catalyst, folks, meaning that it's something significant that we know before the market opens, but is not yet priced in to the market. So when it comes to Fed data, he says, yeah, we're going to keep an eye on crude oil inventories, and we had Fed member Barkin will be speaking today. His other catalysts were energy. Once again, he noted here that energy stocks, interestingly enough, appear to be outperforming the underlying commodity. And he talked specifically about ConocoPhillips and Shell and Chevron, Texaco, and there were some other energy stocks there. And he just noted that it's kind of interesting that crude's kind of trading flat like this, and yet energy stocks, generally speaking, are moving higher. Once again, he did mention China is a huge catalyst here because, this is big on the global market basis to see them break down so hard. Then his other area of concern was on the NASDAQ 100. He noted that it's trading below 50%, matter of fact, 48% on the 50-day moving average. And the only driver appears to be mega caps in the NASDAQ 100. So he looks at the QQQE to get a measure of that. And he has this sense that, once again, with such global focus on NVIDIA earnings tomorrow, if those earnings in any way, shape, or fashion or whatnot, NVIDIA starts to move lower, well, it's not going to bode well for the QQQ, the QQQE, or the NASDAQ 100. Now, Roger also likes to open the session talking about some small caps that he likes. And there were three that were on his watch list today. And I'm going to post those right now in the chat panel so that you can all see those. And once again, those were DSS. And he looked at DSS above $2.40. We looked at NBY and we looked at it at above 186. Initially, it was above 160, but it was moving so sharply in pre-market, he adjusted it to 186, or he said, look, guys, you need to look at whatever the pre-market high and set that as your level. Then SLRX above $8. Now, some things that are important to remember here. Roger's selections are based on price action and volume. I mean, just immediate price action and volume in pre-market. We know that the small caps are not market dependent. So, all of his concerns about what's happening in the broader indexes, et cetera, they don't apply because typically institutions are not even putting any money into small caps. It's retail traders like you and me. And he also made the point, guys, remember, only consider trading these after the market opens and before 2 p.m. Eastern time. Because somebody asked the question, like, how good are these levels good for? And Roger said 2, maybe 3 p.m., but 2 p.m. Once again, you're looking for an early move in these stocks, typically in the first couple of hours. And if it's not there at that point in time, you might need to look the other way. But those were the three that he had on his small cap watch list. And then when it came to his daily stock watch list, let me go ahead and publish those for everyone so that you can see those as well. He had a relatively small handful of short stocks that he was looking at, GGAL, VREX, MASI, Flow, and BMA. And once again, from his standpoint, Roger's just not as keen on taking a short in these markets, generally speaking, because the broader market's not even indicating that there is somewhat of a sell-off going on. But he did note that there were strong technicals supporting the potential for these shorts. On the longs, once again, he had a number of long stocks there. And the one that I remembered, and I put an asterisk by it, that he was going to keep a very good look on was BK. And he mentioned that he was looking at BK a couple of days ago, and it was like a textbook move above the A line, and it continues to be that way. So once again, I know that that's something that he did have a very, very keen focus on. So once again, coming into today's session, today's agenda, we're going to be focused on option spreads, when to initiate an individual position or a spread, the difference between debit spreads and credit spreads. And then Roger's going to give us some real-time examples on stocks that are moving now. And there might even be a bonus trade in there, like yesterday's option spread on RCL. And we do also have a special guest that's going to be joining us today. We all know him. We all love him. Kane Shea is going to be here with us. So we've got a wonderful session planned. And as always, it's great to see Matt. It's great to see Roger. Guys, how are you doing noontime?
Hope everybody's doing great. We're doing fantastic. How are you doing today?
I'm Roger. No, I'm just great. Everything's going
Good.
good here. I'm delighted to be here with you and Matt. Looking forward to seeing Kane. I mean, wow, what a group of trading experience that we have here. So, you know what my question is, Roger, always coming into the open. We have this strong sense about the market pre-market. Then the market opens up and it starts doing its thing. And obviously, for anybody that follows your Telegram, you're sharing with people what you see going on and what's
Oh, yes.
happening at this point in time. And the internals are doing some interesting stuff. But any surprises to you or any concerns or issues we need to be particularly aware of, Raj?
Uh, Beyond what I talked about this morning, actually, no, no. Well, actually, you know what? The only major surprise is it's not a surprise. I'm just happy to see that SMH is starting to gain relative strength. I'm
Hmm.
monitoring well, here, you know what? It's just so much easier for me to show you. Let me just share my screen. So I have this up on my screen at all times. It's right in front of me to the left. So I can't have a screen in front of me because I have a camera in front of me and a teleprompter, which I never use. But I have two monitors here, and two monitors here. So there's six
Okay.
monitors here. And then I have three on my laptop. I showed you guys that last week.
Uh-huh.
So on the top, on the second monitor to my left, right here to my face, I have this right here. This is on the upper portion. And on the lower portion, I have this. So I have two, so I have, so when I find the stock and I want to engage, I want to have two Pro Trader dashboards here. And then I have here on top this thing. And this is something that I watch all day long. And I send you often screenshots with it. And this tells me, this compares SMH, RSP, MAGS, and QQQ to the SPY. You don't have to type the SPY. The SPY is the default. So at any given time, I don't have to look and study price data, and which unless I want to trade one of these, which I usually don't. So what I really want to see is I want to see just, oh my, look at this, it's gaining green, or oh look, it's starting to decline. And it gives me a real, when I say snapshot, I really do mean the word snapshot. It gives me a snapshot of what I'm looking at. And what I'm pleasantly surprised to see is that SMH chips ahead of earnings and mega caps. Obviously, mega caps, Nvidia. We don't have to go very far. They're so far not disappointing us, and it's causing the SPY to make an all-time high, even though for a second, but the SPY did make an all-time high for a few seconds. So I am a little surprised that we're seeing so much momentum. Okay. Yeah, Kane didn't get a panelist link. I didn't see him here. That's what I was just going to ask you. Can somebody give Kane or just make Kane into a panelist?
We got you
You could.
covered, brother. I saw that
Thank you,
too. Yep.
Kane. Yeah. I noticed you weren't here, and I was just like, let's make sure Kane is here. So the only pleasant surprise is the markets are just a little bit stronger. And that's really the only surprise. There really isn't any big surprises. I was expecting this. Remember, markets not doing anything is something that you expect to happen that isn't happening is just as important as something happening that you weren't expecting to happen. Let me say that again because I don't want to confuse people, okay? You know how sometimes, let me give you a good hypothetical. Let's say there's a big Fed report and we don't see any. Hey, Kane, good morning to you.
Good morning. Good to see you.
You too. You too. And those times where we're expecting something, we're on at 8:30 in the morning, and we're expecting the Fed to do something, and there's no reaction. Well, that's when there's a catalyst, and we're expecting something to happen, and it doesn't happen. That's exactly the same thing as when you're expecting something to happen later on and nothing happens. Do you see? So it works both ways. So if you're expecting something to happen and it's not happening, that's something you should pay attention to just as much as if something is happening that you weren't paying attention to. So very, very important. It's a big beginner's mistake. And pros have been on this for years. Sometimes what the market is not telling you is more important than what the market is telling you. You understand? So you got to look at it both ways. You got to consider the market can be very good at being passive aggressive. I think that's kind of what I'm trying to say. The market can do a great job of being passive aggressive. Okay. So and so I'm pleasantly surprised, and I like the fact that because this is boding well for Nvidia, at least for right now, the fact that mega caps are gaining strength. The only negative is the blue chips are coming off. Oh, another big surprise, Raleigh, that I'm pleasantly surprised about is we're seeing some upside in financial stocks. We actually took a profit on one of them about, I don't know, 20 minutes ago. We still have another one. It's the only time I double loaded on something because I was really bullish on the financials,
Okay.
and they're not disappointing. So let me explain to you why that's a good thing, folks. When financials go up, that's very, very positive for the market. Okay. That's very, very. Markets usually do not go up with like consistently without financials being on board. Because remember, why do markets crash? Credit crunches, right? Financials. Very, very important. All right, let me say hello to everybody real quick, and then we'll get going. I got a really great class for you guys today. Yes, you could email me directly, Lewis. Raleigh will hook you up with that.
Yep.
Hola, Steve. Yes, Liberty, Lewis, David, Richard, John, Andrew, Peter, Pat, Rock, Solaire, Tammy, Robert, Phil, Jay Singer, Kai, Bob, Becky, Solaire, Raindog, Randy, Tim, Scott, Greg, Stephen, Lib, John, Deanna's here. Good morning, Deanna. Marina's here. Raleigh's here. Yay. Mike Clyde, James, Jeff, Stan, Jeff, Eduardo, Jeremiah, Ron, Joe, Abe, Zach, Flying Ronan's in the house, John, Nestor, Manuel, Arnulfo, Bill, Lacey, Mike, Carl, Wesley, and Tony, Adrian, and Bob. Hey, Bob, thank you for those numbers. And Shannon, good morning, everybody. Good morning, Delbert. Good morning, everybody. And then YouTube, we got RP, Peter, James. Peter, you're here and there. Raj, Genevieve, David, Jason, SJ, C. Fazio, Richard, Kevin. Hello, hello, hello. And folks, we have a great presentation today. I'm going to give you some ideas. I'm going to try to get inside your head again, okay? And no, I'm not a shrink. and then Kane is going to give us a very, very interesting class that will go very much in line with what I am teaching and talking about today, okay? I really like this stock a lot right here. I'm waiting for I like a couple of stocks right now. I'm just waiting for the right moment to strike. Put this over here. Let me just check something real quick. That one too. I have an alert set at this one at the VWAP right now. Nice look at stock. This is not recorded. This is live, Ed. I mean, it is being recorded, but it's live. And it's also being broadcast on YouTube, which records every step we make. And when I say every step we make, YouTube literally records everything. Nothing gets by YouTube. Okay. So,
Excuse me for a second, guys. There's somebody at the door here. I have to get this quick. I'll be right back.
yeah, no problem. All right. So, folks, and Kane, I know you're just coming in here right now. So what I want to do today is I want to take folks. A lot of folks ask me, well, when do you do a debit spread? when do you do a credit spread? When do you do a straight call? So how far out do you go? So instead of giving you hard and fast rules, what I'm going to do is I'm actually going to give you my watch list. The actual watch list that I'm looking at right now. This is my watch list. This is literally my watch list. And I'll give you, based on all the circumstances that we need to take into account today and tomorrow, and NVIDIA earnings, what we would do, if anything. Okay? So, because you see, hypotheticals are great, but they're hypotheticals. I'd rather just give you the red meat. Is everybody okay with that? Just say yes, and we'll move on. So you red meat and the options, and show you why not. So you can kind of get into. It's much better when you can get into my head, because then you'll start thinking like me instead of just, well, he said here and he said there, and it doesn't work this way. All right, Mazel tov. We have liftoff. So let's do this. Okay. So the first stock, and again, I'm literally doing this like you guys are not here. Okay. So I'm just gonna like verbally talk each one through, okay? All right. So Mossy looks like a very, very nice short. The fact that a stock is breaking down in this market, in this crazy market, it's a very choppy stock. I wouldn't day trade the stock. And I would probably wait to get into the short when it hit VWAP. Just based on looking at it, it's got an average volume of nothing. So I'm not expecting the options to be very good.
Hey,
So let's
Roger,
look at the
excuse me. I hate to interrupt you, but I'm going to be offline here for a few minutes. The cable people are here and
Oh
they're doing
boy,
some upgrades. It's
yeah,
just going to, I will be back to you as quickly as I can. I'm sorry,
yeah, no,
folks.
no, no problem. Do your thing.
All right.
All right, all right. Let's do this. All right. Okay, so I'm just. Okay. All right. Choppy stock, not clear price action. As I mentioned before, even looking here, you could just see by the volume that the option spreads are wide. In these type of circumstances, if I was to do this trade, and there's a big if, okay? There's a big if there. What I would be looking is 23. There's no weekly options here, so you can only do monthlies. That's another red flag. If this was very liquid, trust me, you would have weekly options on this. Supply and demand. The spreads are just awful. So I would not touch this unless I was just doing the underlying. There's not much to work with. Now, what you could do is this. Now, I'm only going to explain this for you if you're a professional trader. Do not do this if you're a beginner, okay? Because the spreads are really, really wide, you could do a debit spread and really work this order, and you can try to get filled and turn it around and sell it by just a discrepancy in the spread. Now, if you are an advanced trader, then you know what I'm talking about. If you're a beginner trader, close your ears and don't listen to what we're talking about right now, because it's just going to confuse you, okay? But you could take advantage of the disparity just by using limit orders when you're trading. So I would do debit spreads, and I would do limit orders, and I would literally start working the order. When spreads are this wide, you can take advantage of the market makers sometimes, buy really cheap and sell a little more expensive on a little downtick. Again, forget everything I'm saying if you're not an advanced trader, and if you are and you want more info, you could send me an email, but I think if you're an advanced trader, you already know what I'm talking about. Okay, let's continue. BM, and remember that we don't have a lot of choices to the downside, so there's not a lot to choose from here. Okay, beggars can't be choosy is the attitude. I've been bearish this stock for quite a while. It actually moves really well, but again, the spreads. Look at the volume, 281,000. There's no volume here. Okay, so I really wouldn't do it unless you want to do what I just discussed. So next one, GAL. This one's starting to get a little overextended for my liking. But the spreads are okay. Because it's overextended, I definitely wouldn't do just a straight put. You don't have anything closer to this. Implied volatility is not that high. Honestly, there's nothing here. If you really love this stock, wait for it to get to the 8-day EMA on a daily around 44, and then just do something like something 23 days out. But I wouldn't touch this right now. Okay, I just would. Just overextended. Moderna, finally something that's not overextended. The problem is this is a high volume bar and it hasn't broken this low. So that's a major, major, major problem right there, okay? You got to get below this area here. So it's not ready yet. But assuming it was ready, what I would probably do is I would go, if I was doing a spread, I would go 9 days out. I would start at 0.50 delta. Right here, 24.50. Notice I don't go to the strike price. I go to the delta. The delta decides what strike price I do. So if you ever send me an email and say, what strike price do you do? I'm going to tell you that the delta decides what strike price I do, not me. I just follow the vertical and lateral. That's all I do. I go down and then I go to the left. I don't even think about this. So right here, 9 days out, 4.9 delta, closest to 50. Start right here. There's your anchor point. 24.50. Remember, let's say you want to do 24.50 versus 24. Okay, well, that's 50 cents, and I could see that there's going to be a problem here. You're not going to get this for a quarter. So no good. Okay, let's go wider. Remember, 50%, no more. Debit versus spread, okay? So 24.50 versus 23.50, that's $1. Yes, you could probably do that for better than 50 cents or like 40. Yeah, you could probably do this you'll definitely do this for less than 50 cents. So you don't do 24.50, 24. You do 24.50, 23.50 because you could do the spread for less than 50 cents and you have dollar upside. See why we can't do 23.50? Not because I don't want to, not because I know something mystical that you're not aware of, simply because this is 50 cents and we can't get this for 25 cents. It's that simple. Right here, 24.50 versus 24. But we could do 24.50 versus 23.50 for less than 50 cents. So we can't do this for less than a quarter, but we could do this for less than 50 cents. And if we couldn't, I would just continue and continue and continue. Okay? So just again, I'm trying to explain this to you, and I would only go 9 days out. Why do you go 9 days out on a debit spread? Well, A, we're not paying a lot of money. Okay, real important. We're not paying a lot of money. That's first things first. And number two, you can roll it over. Number two, the implied volatility on this option, 24 option. Look how expensive this option is. In 9 days, it's going to be worth nothing. You're paying for air. This is air. That's 40 cents worth of air. Okay, just FYI. So you can keep rolling these for 50 cents instead of going 23 days out and paying $2.82, which is exactly what you would pay. So it's cheaper. It's cheaper. You understand? Now, if you want to just do the put, and I'm not doing this, I'm just letting you know, I would go 23 days out and I would go 71 and I would do this right here. Now, I think that's kind of expensive considering ATR is only $1.19 on this stock. I think paying almost $3 is expensive, but I think paying 50 cents is not that bad. And I get 9 days. Right? Are you guys following what I'm saying? Just write yes if you are, no if you're not, because we're going to do many more examples. So I just want to make sure we're on the right path. And folks, don't try to make money on this signal. Try to get into my head. Okay? It's a big difference. Don't try to use these to make money. Get into my head. There's always going to be a trade. You know? Okay. Well, I'm gonna give several examples. I just wanted to.
Yeah, I think a slightly different way of thinking about that. That you want that shorter expiration on your spread because you want to capture when the underlying price goes into your max profit zone. Yeah. And once it's in there, then if you had a lot of time left, your return curve would be really, really shallow. You wouldn't make very much. And so you're risking a bunch just to make it a tiny bit. So you want that because the time value is where you get a lot of it. That curve becomes steeper. So you want that shorter expiration.
Right. Okay. Now, question for you guys. Somebody actually asked a good question here. Hold on. Or I guess I forgot what I was going to say. I was saying something interesting. Oh, Dave, yes, I have it right here. Dave Crystal Johnson says, when do you roll an option? Have you guys ever seen me roll an option? John, your answer couldn't have been better. Look what John T just said. Don't roll, David. Losers average losers. I've never rolled an option. The only time I would roll, it wouldn't even be a roll. Rolling options is just saying, "Oh, I screwed up, so I'm going to make it up. I'm going to try to make it up." Well, just admit your mistake and move on. Now, if I still like the trade, then it's just a new trade. I've done that on Microsoft. I did a Microsoft option a couple of weeks ago. It was a gain, and then we did one a couple of days ago, and it was a loss. But the point is, I wasn't rolling anything. I just liked Microsoft still. So again, usually you roll when you locking in losers, not locking in winners. Okay, I don't roll, and I don't average down. I don't do any of that stuff. Okay, CCEP. I don't really care for this right now, especially with this upside move. But again, hypothetically speaking, it's got crazy wide spreads. Volume is really low. So I really wouldn't be doing very much with this right now. Okay, ball. Ball is breaking down from this compression. Still below the VWAP. Actually looking pretty good. You got a little high volume here. You got a little bit in here. Spreads are okay, except you have only monthlies. Let's see, 0.76. You got $3, 23 days out. Volatility $1. It's too expensive. So I would probably buy the. I would do this. I would buy the 52.50 and I would sell the 50. Okay, that's what I would do here. Notice you have 34 cents of intrinsic value on the one you're buying, and you have no intrinsic value on the one that you're selling. Which one do you think is going to start decaying faster? Okay, just FYI. But Kane did make a very good point. VIST. Now, this one is a grinder. On a grinder, we actually want to have more time, but 3 weeks is fine. Now, probably 65 delta, 245. Yeah, I would probably, honestly, I would just buy this. I would just buy the 40 put here because you're not really getting enough of an offset here. And then you're locking yourself up, but you're locking yourself up for, you know what? Now that I look at it, I didn't realize they were 5 points apart. I thought they were $2.50 apart. With $5 apart, I would offset it because you're not losing anything. I'm not going to hold this for $5. So, you're good here. You're good with this one. You can buy the 40 and sell the 35, and you have plenty of time. And this is a grinder. Okay, this is not a it's just a grinding stock. It's not really doing anything crazy, and we have to get beyond these candles. I'm encouraged by the fact that most energy stocks are up and this one is down, so it's really really weak, like really 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 weak. All right, that's Matt. Are you doing anything on the SPY?
I have not yet.
I didn't think so.
Thinking about it.
Yeah, I know you're thinking about it. I see why you're thinking about it too. That's right, Tammy. You tell them. All right, now let's look at our longs, okay? Stocks. All right. So, how is the stock? How is the stock looking right now? It's moving up. Got a nice little trend. We're above this area. Volume is a little low, but spreads are okay. Doesn't really have. We're going to the long side now, folks. So switch to calls, okay? Let's see here. Right here. You can buy the 67.50 and you could sell the 72.50. You have $5 room here and you're paying about $2, $2.10. So you're paying less than $2.50. Can't do 67.50, 70. It's $1.40. You need $1.25 top. Yeah, red, white, and blues, right, Jeanette, red, white, and blues right below us. This is a long. This is exactly what we should be doing. Okay? Exactly what we should be doing. By the way, the market is starting to cool off. I want to show you guys something interesting right now. Look at this. Look at RSP. And now look at SMH. It's cooling off. QQQ is cooling off. MAGs are cooling off, but RSP is not. Blue chips, money's starting to flow back into blue chips. Okay. So far, I haven't really seen a need for many credit spreads. The only time I would do a credit spread is in a situation like this, but I would do it on the put side. No, it's about 80 cents here. No, it's not that good. Not very good premium. So no, I haven't seen any reasons to do that. Okay, that's awful, Perry. That's awful. Okay. Let's continue. Let's continue. CTVA. It's a very nice looking trade. Now this trade looks like it can have some potential upside. Okay, real upside. Okay, so this thing looks like it can come up to a little substantially higher. Again, only monthly options on this. Notice smaller stocks are starting to come up. What I would do is I would start at the 75 right here and offset it. No, it's not worth it. I would just buy the 75. And honestly, you don't really need to do anything else because look at ATR. It's about 113 and you're paying 130 for this. It's not that bad. Just buy the 75. Okay? You could just buy the 75 or you could buy these and you're pretty much getting it for, look at this, Kane, almost intrinsic value.
Yeah, that's
You're
crazy.
not really paying very much for this.
Well,
Honestly, this is mathematically the best deal because you're not paying anything for it. What does that mean you're not paying for it? You're not paying anything for it. It's all intrinsic. You're literally buying the option for no cost. Look, 480 is intrinsic value. Yeah, if that. That's good. That's good. That's really, really good. If you can ever buy so folks, if you can ever buy an option, first of all, I love the stock and I really like this option because you're not paying anything for it. You have you have no time decay, nothing on this option. You're literally paying for, you're completely par here. Or yeah, like Richard just says, paying 10 cents. That's good. That's good. If you like this stock, I would wait for a pullback right here. I'm actually going to set an alert right here. Price history, 1 day, just today. Okay. Next, I just want you guys to understand why. Okay, why? That's the key here. Oscar, very choppy stock. Expiration, I would go 9 days out. I wouldn't go very far on the stock. Go 9 days out. I would go closest to 0.50, which is 0.47 by the 1750, and I would try to sell the 1850. You could do this for like 20 cents, 30 cents. That's pretty good. That's pretty good. 9 days to go. Then you can keep rolling it over, or you could just buy the 23 days out for $2. It's not too bad. One of the two. But I would wait for CTVA to 8 or VWAP. CTVA to the VWAP, Peter, if I'm day trade to the VWAP. Right here to the VWAP. Right there. Right to the VWAP. Okay. Right here. Right there. 74.25 area. Okay. I like the stock. I like the stock a lot, actually. Next one. Oscar. I think we already did Oscar. Apple. Please don't do this today heading into Nvidia earnings. Don't be foolish. I mean, you could do it if you're a gambler, fine, but you're just taking a gamble. Right here, 9 days out, you can go right here starting at 230, and you could do 232.50, and you're going to be paying about $1.25. If you can't do this for $1.25, just go 230, 235. And you could do this for sure for you could do this for like $2. I could see it right here. And they're very, very liquid. Yeah, you could do, you don't even have to. You could do 230, 232.50 for $1.20. I mean, you could see it right here. Okay. Yep, it's a perfect A-line, Mike. It's a perfect A-line. But you see something trumps the A-line, and that's called Nvidia earnings. You understand? That's the problem. Remember how I talk about the big picture, guys? Well, today you have a situation kind of like you're trying to plan a wedding, okay? You're planning a wedding and you want this wedding to be beautiful and you want to spend your life savings on this wedding. And you're planning a wedding, but you're not taking the weather forecast into account, and you're in Seattle. Okay? Where you'll have the best food, you'll have the best dressed, you have the best invite list, you have the best music, and nobody's going to come because it's going to be pouring rain and it's an outdoor wedding. See the problem? Do you guys understand? Kane, do you agree with me?
Absolutely. Yeah. So volatility always destroys technicals. Yeah.
Right. News, unforeseen news. And NVIDIA is unforeseen news. And Apple is a mega cap. And if you think there's not 1,000 different hedge funds that buy Apple and NVIDIA together, I'll sell you a bridge in Brooklyn. How about that? Okay. No, Uncle, we don't spend our time looking at trades that are not germane to everybody in this program. That was what my email is for. We don't use this as a quickie way to get my attention. That's what my email is for. You take the lesson I give and you move on. All right, Uncle? And there's only one Uncle here, and that's me. All right, let's continue. Net. See where my anchor is? See where this is? It's a very, very nice trade. Technology. Oh. At the VWAP, actually, on the day of NVIDIA earnings. Am I going to be a brave man? No, I'm not. I don't need to take Alka-Seltzer all night. So if you want to do quickie, you could do a 0.53, 202.50 versus the 205. This will set you back about 5.25. If not, 1.25. If not, you could do the 202.50 versus the 207.50 right here. All right. Of course it will be, Mike. But again, we're in Disneyland right now. We're in VIP room. We're not in real world. So if you wanted to do it individually, you would go about 23 days out, and you would go to a delta of about 0.70, and you paid $14. Now, before you get upset at me, look at the ATR on this stock. It's only $6.70. So $14 is 2 ATR. It's quite expensive. That's quite expensive. Okay, so I would probably opt to do a debit spread and pay $1.25 or $2.50. That's what I would rather do, and just roll it over. But again, this will be impacted by NVIDIA. Okay. VLO. Man, I'm showing you guys some really good stocks today, I got to tell you. It's a nice looking stock. Got resistance here. Got a nice little breakout here. Nice little support at the VWAP. So let's say I wanted to engage with this stock. And let's say I wanted to do a spread. I would go 0.54 right here, 149. And then I would sell the 150. My gain is $1. How much am I spreading? Am I doing it? 30 cents. That's fantastic. That's really, really good. All right. Let's now, if I wanted to do this longer term, I would go 23 days out and 0.67 right here, spend about $7. And I don't think I'd want to do that because ATR is twice that. I mean, ATR is half that. That's not good. I wouldn't be buying this right now. These are just stocks on my watch list. I would be waiting. I wouldn't be doing anything till it get back to the 8-day. But again, I like the stock. It's on my watch list. I like how it's consolidating near the top. It doesn't break 50% of this area, and it starts moving back up. I like it. Remember, I'm not marrying these girls. I'm just looking at them closely. Okay, I'm taking a closer look. Oklo, nice looking stock for a possible swing trade. Looks very similar actually to MP. Nice short-term trend right here. Moving directionally. Not a beautiful stock right now, but it's holding on to the VWAP. Definitely wouldn't day trade it. Very choppy stock. Again, I would go 9 days out. I would go to right here, 75 delta. And then I would go 76 delta, and I could pretty much do this for 30 cents. Let's just say for now, 50 cents or less. Yes, we can. And we have $1 upside. That's all we need. It's all we need. Okay? All we need. Yes, Phil, what I like to do, I like to buy individual options when the price is closer to the ATR, not when it's 2 times ATR. 2 times ATR, it's not that cheap. But when it's closer to 1 ATR, it's a better deal. Okay, just FYI. That's why we have ATR.
It's harder to make money when it's too many multiples of the ATR. So another way to think about it is by expiration. In order for you to double your money to make 100%, then the price would have to move 2 ATRs in order for you to double. And that's a pretty big distance to cover. Exactly.
That's why I like to keep the ATR as close to 1 as possible. Now, you're not going to get a lot of times 1, but you just to give you something to measure. Oh, my back scratcher. Somebody bought me a back scratcher. Finally. Oh, this is Shannon. We're looking at TC 2000 right now. You're literally looking at TC 2000 right now. Okay. Price is just last price. On Thinkorswim, it would just be last price. What's a quick way to get the ATR? To add the 10-day ATR to your right here, like I have it right here. Just add it. Okay. All right. Let's continue. RGTI. Okay, it's moving higher. We like these. Notice I'm not picking a lot of stocks that are breaking out right now. I'm picking stocks that are starting to come back up. Very important. Notice that. A lot of my stocks are starting to look like they're coming up. 9 days out. Right here. Here's my sweet spot. 1550. And how much is this? Yeah, it's about a quarter. If not, let's do 1550, 1650. Yes, 50 cents I could definitely do here. All right. And you have 9 days out. Now, again, if you want to go 23 days out, ATR is $1.23. We're at 213. So a little less, 69 right here, 180.81. It's not too bad. This is 123. This is 181, but it's not 260 or 250. Just to kind of give you an idea of what we're talking about here. Okay. ASML. Wow. Can't believe I'm even talking about this. RGTI, let's take a look. I'm going with the assumption that we're doing the trade right now, Mike. I'm not doing it right now, but I'm doing it, and it's been holding above the VWAP all day. It's actually doing a pretty good job of holding above both. ASML. Now, would I take this stock right now? Not on your, not if your life depended on it. Why, Roger? Because Nvidia's coming out with earnings after the close. But tomorrow's a new day. And look at this gap. What do we call this type of a trade? There's a name for it. Zach has it right. Gap to green. That's a classic gap to green right here. But Roger, you need to give us a gap to green. Why aren't you giving us gap to green? Because this doesn't mean anything in comparison to NVIDIA earnings. But let's say NVIDIA earnings already passed. Well, if you go 23 days out on this stock and try to buy the option, you're going to be paying $35. That's 3 times what this is. 3 times. That's awful. That stinks. I wonder if NVIDIA earnings have anything to do with that. Let's think about that one for a minute. So you could go right here, 0.52, right? 767.50 versus right here. That's $2.50. Yeah, you could do this for about $1.25. If not, you could do right here. You could do this for $2.50 probably. You could probably get away with it somewhere in that ballpark. Okay. You could even do this one right here. Yeah, you could do this one right here. 13. Could do that one for. Yep, you could do this one for $2.50 right here. Right there. So instead of spending $3,900, you just spend $250. So don't come crying to me and telling me how you have a small account and you can't trade because you have a small account. Why would I do a credit? Somebody's asking credit. Why would I do a credit? Why would I do a credit if I have okay. So I have a gap here. I have nothing to the left. Okay. I'm expecting this thing to move. Baby, I'm looking for a move. Why in the world? Why in the world would I want to do a credit spread? I'm looking for a move. You're breaking out. You're not overextended above the 8-day EMA. The stock has amazing relative strength today. Amazing relative strength. Why in the world would I want to do a credit spread on this? This looks to me like it can run nicely. That's a classic. This is a classic. And I don't know if you guys noticed this. Remember what I told you my favorite setup is? I keep telling you, but a lot of you don't pay attention to anything I say. What is my favorite setup? line. Anybody tell me? A line is my favorite pattern, my favorite setup. Bigger picture. They can be both. I never used the word wedge in my life, Hefe. Triangle, ascending triangle. How many times have I said that? At least 100 times. Ascending triangle. Why? Because you're consolidating and you're or descending triangle. It doesn't really matter. Love my ascending triangles. I love my ascending triangle. So I have an ascending triangle breakout, not overextended. I'm in the gap. The stock is outperforming the market now, or with the market. I don't see any reason why I would sell a put on this. I would rather do I already explained why. So Michael, I've already answered that question. You must have not paid attention. If you want to spend $3,900, then you should buy a call. But most people here want to spend $250. Now, folks, Matt, can you do me a favor and post a link in YouTube and usher folks, because folks, Kane, see how I've been talking nonstop? Well, we're gonna get Kane to do some talking right now. Kane is going to show you a lot of what I do under different circumstances, how he does the same thing. Okay. So folks, don't go anywhere. This is really, really good stuff. I highly recommend you pay attention. Kane, are you ready?
I am ready. Yeah.
All right. So folks, I showed you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Hold on, let me switch my T1000 here. Kane, you didn't hear what happened to me yesterday, did you?
No, what happened?
Oh man, I had something scary happen to me yesterday. So I come into the office and I have my I have my laptop right here with the 3 monitors. And I have Telegram on this computer, and I don't reset the computer. Matt resets this computer that has Thinkorswim, the big one. You've been to my office. I have the laptop on the left. And put this ticker symbol here. I'm just looking at this. So, and I see this trade. It's like, I don't know, 5-10 minutes till 10. I see this trade on MP. And it's a beautiful momentum trade. And I'm like, all right, let's go in. And I'm not focused on Telegram, I'm focused on the trade. So I'm focused on the Telegram. I'm like, okay, start scaling out. And I mean, the trade is just going beautifully. Start scaling out. Okay, scale out a little more, take full profit. I think that the whole thing lasted like 10 minutes, maybe. But it gave us like we thought it gave me a nice dollar, about $1 profit, maybe a little over $1. I don't even remember anymore. And then I look at Telegram and I don't see any, I usually get fires, emojis, thumbs up, thumbs down. I'm like, there's nothing there. So I'm like, hard crowd. What's going on? Like, how come nobody's like, I'm like, well, you guys are party, like wet blankets or something, right?
Yeah.
And I'm like, this is weird. So I look on my email, which is on my regular computer here, and they're like, your Telegram is delayed. I'm like, oh my God. So what happened was I didn't reset my computer, and the clock on the computer slowed down like 7 minutes.
Oh,
and
wow.
My computer, which I only use for communication and TC2000, was on. So I'm putting my trade in real time about 8 minutes before everybody else. And I'm getting out of the trade literally as people, like a minute before people are putting in the trade.
Wow.
I've never in my life had that happen before. And so now I restart the computer and I check it every day. But can you imagine? So
That's crazy.
I ended up
didn't know
holding
they
the trade. Yeah,
Yeah.
it could really screw people up. So I've never had that happen in my life, and hopefully it'll never happen again. But boy, oh boy, oh boy. So just make sure when you are, Kane, learn from my mistake. Make sure your Telegram is not working slowly, okay?
Yeah, absolutely. I'll watch out for that.
That could really, really screw you up. And so now I have a trade that I literally, now we're all stuck on a trade that we're holding, and we're down on the trade, which is fine. I still like the trade. but we're holding a trade because I don't want to, say, well, I made money and, you guys didn't. That wouldn't be fair. But the moral of the story is check your Telegram. Don't let what happened to me happen to you. Okay.
Okay.
Don't let happen to me what happened to you. All right, folks. So let's start this class. We're going to start right now. Thanks to a hidden feature in some of the most liquid options out there, we're able to target, Kane is able to target payouts worth $700 every day of the week. And today, he's going to tell you how it's done and all the details about it. Mandatory disclaimer. Matt, go ahead, give them maybe another minute or two and then cut YouTube. Please give them the link so they can come in here, okay? Folks, the profits performance are not typical. We're not going to make any future earnings claims, and you may lose money. The trades expressed are from historic back-tested data in order to demonstrate the potential of the system. In live trading setups from February of this year, live, Kane has given 65 alerts, 51 wins, 14 losers for a total win rate of 78.5%. That's very, very nice. And the average trader, winner and loser, has produced over $317. And every example is based on the same 5,000 starting stake, unless otherwise stated.